Well, let's focus on the big stock then. Sudarshan Chemical. CNBC TV18's Newsbreak was confirmed. Sudarshan Chemical subsidiary all set to acquire global pigment business operations of Vyubak Group for around 1,180 crore rupees. To discuss this and more, we have with us Mr. Rajesh Rathi, the MD of the company. Hi, Mr. Rathi. Good morning and thanks a lot for joining in. Congrats on this large acquisition. Fill us in with the basic detail. What is the rationale for going out there and buying a bigger competition?
I'm very delighted and excited to announce that through this acquisition, Sudarshan's dream of becoming a truly global player with a global asset footprint is coming true today. To give you some facts, we are buying a global chemical major with 17 manufacturing plants in 11 countries. They have a very healthy global sales spread across Europe, Americas, and Asia. Also, a strong presence in all the industries which we serve. Though the deal was part of their German assets had gone insolvent, and hence that was an asset deal. But the rest of the global business, it was a share deal. Both combined, we've paid euros 127.5 million for this deal.
But with specifically this deal, in terms of production, capacities, access to which geographies, could you share some details? What are you getting?
To this business, we are buying 17 manufacturing plants in 11 countries, right? And I have access to all the major customers globally across Europe, Americas, and Asia.
If you look at the Vyubak business, right? I mean, it has lots of headwinds. Business has been slow. It's been declining. Could you give us the underlying basic rationale for buying this business? I mean, is it the valuation that you got it at, or the confidence that you'd be able to turn this around? Is it a temporary slowdown?
First of all, the pigment business globally grows at 3%. And of course, in Asia, the growth rates are much higher. So I would disagree that it's on a decline, right? Until 2022, I think this business was, until 2021, I would say, the company had a revenue of close to about 1 billion and consistently generated 100 million plus of EBITDA, right? In January 2022, Heubach and SK Capital bought this business at a valuation of about $1 billion. Post this acquisition, Heubach faced several financial challenges. One is, of course, some external factors like headwinds due to the Ukraine-Russia conflict, leading to high energy prices, demand reduction. This was a temporary issue for that year, but the company could not come out of it as the balance sheet was not healthy. It had a very high interest cost and debt. That was one reason. Also, the integration process between the companies was not at a good pace, and hence the energies could not be captured.
Okay, and that's how it ran into financial troubles. Got it, Mr. Rathi. Let's talk about the money that you're putting to work. I think the total size is about 1,200 crores, just a little under 1,200 crores. That's how much you're spending. How much debt does this asset have? How much debt will you take on as part of the acquisition? And will you be raising fresh debt to fund it? Tell us more about the deal.
The deal is for the global business, right? Part of the business, which is the German business, had gone into insolvency. So for that, we've done an asset deal. And the other global business is a share deal, right? And for both these acquisitions together, we are paying euro 127.5 million and on a debt-free basis. So we don't get any debt.
Okay, so you're saying that this is an asset-only deal. You get the assets, you won't be getting any debt. You're confirming that, right?
Yes. Of course, as we redo the business, as we transform the business, we may require some cash infusion in terms of working capital, in terms of some of our cost initiatives, in terms of, so for that, we may require some cash infusion.
Mr. Rathi, fill us in with a little more detail on that. What is the capital infusion that you're looking at to get operations fully functional? And also, what are the timelines you have to get these operations on track?
So firstly, to clarify that the plants are fully running and in operations, we don't require any more capex, right? They are running at a very healthy capacity utilization, and they're serving all their customers well, right?
So what is the enterprise value of the deal?
So we are paying, like I said, we are paying 127.5 million for the deal.
And just to go back to what you said earlier, we could give us a sense of how you will go about with optimization of resources, addressing labor law concerns and CCI regulations in India and some of the other geographies?
As we speak, we've done a complete analysis of this, and we are very confident of getting the clearances, antitrust clearance, between 3 to 4 months.
Mr. Rathi, have have the headwinds abated that the chemical sector has been sort of dealing with for the past, I think, 2-3 years now? So is there a clear sign that demand is beginning to pick up? Basically, we're trying to understand if things have bottomed out for the chemical space.
Sudarshan's own business has been very healthy. We've been registering a very healthy growth and also profitability. As I said, the entire industry faced headwinds during the Ukraine-Russia war. There was global inflation, and that led to very high raw material prices and demand reduction. That's what led to a slump in EBITDA, but I think we've recovered very well.
All right, Mr. Rathi, I'm going to try to push you for some numbers now. For FY25 and FY26, give us Sudarshan's guidance and also Sudarshan plus UBAC growth guidance for the next couple of years.
I think currently, let me give this in a directional answer in a directional manner. We feel, firstly, I think both the acquisitions would be this acquisition will be a grand success. From day one, what principles we are using is from day one, we will integrate this into one unified company, right? We have a detailed plan for value creation, right? Whether it's manufacturing efficiency, procurement efficiency, SG&A efficiencies. We'll also have a strong control on working capital and cash management. We will use our 2 strong pillars in Sudarshan, which we will use for growth, our customer centricity and agility and efficiency to drive this business to a very, very healthy position. Of course, lastly, people make the difference, and we will create a very high performing team who understands the pigment business with good technocrats, with good execution skills and technical competency, as I mentioned.
By the way, sir, as we speak, Hubac Colorants, the listed stock, the India business, which is listed in trades here, that stock is now down 16%. We should actually pull it up. What are the plans? Can you just tell us in terms of the listed India entity, Hubac? You will be making, I'm sure there's an open offer involved, or is there some wave off? I'm not sure because market's very nervous about it. The stock's down 16%.
So the board, the lawyers and the board are all looking at several matters which will get involved, and whatever are the regulations, we will comply with them.
Okay, we would definitely want to come back and touch base with you because maybe that could be one issue that's weighing on the stock. Is there something which will eliminate the need to trigger an open offer as Sudarshan Chemicals acquires this global business? Will it have to make an open offer for the India listed business of Hubac also or not? I think there's a lot of uncertainty, and that's not working very well for that stock, the one on the bottom side of the screen. Let's take a break.